Let's see what's happening in other markets now. Talking about the crypto space, that we see Bitcoin price remain well above the 20,600 level and 20,500 level. Let's look at the sentiment in the market. The sentiment in the crypto market now we see is about 33 points there, pointing to fear. Been in extreme fear for the longest time, but we're now in fear in the market. 33 points there, fear, showing that investors are getting a little more comfortable in this market, a little more comfortable buying the dips at this point. Let's look at what's happening with the market cap there. We see the market cap still above the 1 trillion level, down 1.65%. Over the weekend, it did get to about $1.10 trillion, $72.73 billion. That's up 8.78%. The volume traded in the total crypto space, Bitcoin dominance sitting 38.74%. Let's look at the price of Bitcoin. They did have that surge to about 21,000 over the weekend. Weekend was quite green. Talking about Saturday, where we saw that correction downward happening on Sunday evening. There's down 1.150% this morning, $39.56 billion. That's what's traded in the total Bitcoin, talking about Bitcoin volume. Let's look at the Ethereum price there. Ethereum 1,584, still holding that psychological level there, $1,500. It's down 1.95%. Volume, less volume than we had when the markets were surging there, $12.78 billion. Let's look at the top odds by market cap. We see it's all red this morning, down 3.24%. BNB did get to $350 over the weekend. We see Cardano also down 3.41%, and XRP 46 cents. That's down 4.31%. So we're seeing a major correction, in the markets right now. Let's bring in Michael Enaji now, financial market analyst. Hello, Michael.
Hello, good morning, Letty. Thanks for having me on.
Good morning, and quite a pullback we're having this morning. There are reports that, Binance to liquidate its entire FTX holdings after recent revelations. Looks like one centralized exchange against another. How are you seeing this?
Yeah, it's a really interesting spat that developed over the weekend. So FTX was originally incubated by Binance, Binance being the largest cryptocurrency trading exchange by volume. So they were incubated back in 2019 by CZ and the Binance team. And so the $2.1 billion deal to basically cash out Binance holdings was initiated at some point last year. But ultimately that was moved up the ramp. So that the deal was liquidated more sooner, just because CZ noted that there were some peculiarities in terms of what he was seeing in terms of the liabilities that FTX holds. The rumor on the street is basically that FTX doesn't have enough assets to offset their liabilities. And effectively, there's a bank run on FTX at the moment. So you've seen people from FTX, like the CEO of Alameda Research, the trading part of the firm, come out and say that their balance sheet is strong and they're able to weather the storm. And they can, if CZ wants to make a deal, they'll happily buy the rest of his FTT tokens at $22. So they've come out and they've made a stand saying that they are physically stable. But at the end of the day, this is one of those things in crypto that, we usually never recover from. Once there's an impression that, that you're not solvent, most market participants don't want to see where that ends up. They start pulling funds because, unlike banking, where there's the FDIC insurance, once your crypto exchange fails, you're ultimately left holding the bag. So no one likes to see these rumors at the end of the day materialize. People rather act rather than be left holding the bag. So you're going to see FTX in the next couple of days try and dispel this rumor like they already currently have. So you saw Caroline, the CEO of of Alameda Research, come out and say that they have $10 billion worth of assets that wasn't part of the news report where their balance sheet was leaked. So at the end of the day, they will try and fight this. The reason why you saw the FTT token slide down is because CZ basically said that they're going to sell And so at the end of the day, you have billionaires exchanging volatile words at each other on Twitter. And it's one of those interesting things where, at the end of the day, we really do not know how it's going to play out. It could end up being an absolute nothing burger, but that there's higher odds that this is something to be noted and something that should be treated seriously, because at the end of the day, a crypto exchange going bust the size of FTX is not something to scoff at. Most likely they are fine because of their size, but it's something to know.
Right, and when the billionaires are fighting, obviously retail is going to feel, the impact of all of that spat going on right now between, the big investors. What do you think retail should be doing, at this point to create some kind of buffer?
Yeah, I really do believe in diversification of if you must leave your crypto on an exchange, I really do believe in diversification of your risk. So if you must have coins on an exchange, do split them up. Or if you must, you can use an exchange that is reputable and has been here for a long time. Things that come to mind, exchanges like Kraken have been here since 2013, since Bitcoin. So I do really believe the best way out for people in times like this is buy a hard wallet, like a ledger or some kind of infrastructure that doesn't relegate you to needing any kind of financial intermediary. So practicing diversification of funds through different exchanges as well as custodying your own funds is truly the only way to prevent yourself from worrying about something like this. So at the end of the day, retail really should worry about where their funds are. In the bear market, the water comes in and we see who's swimming without clothes. So I really do think the bear market is one of those times where people will get exposed very quickly, and you see how really bad it is. So it's one of those things where you really got to be careful where you're placing your funds.
Yeah, but I got to be very careful there. I guess not your keys, not your funds at this time. But it's a new week, Michael. What market moving data, especially for Bitcoin, are we expecting?
So last week was a pretty frenzy week, and we had a lot of reporting. And so I think this week's going to be quite different. It's going to be a quieter week. There's not a lot on the board, but we do have the CPI readings coming out on later on this week. So it's one of those things. CPI readings tend to be the beginning of another leg down. Usually, if the data hasn't been good for the last couple of months. But if we get a CPI number that looks better, you can expect the market to go up. But I really do believe inflation is here to stay. The Fed's not going to change. It's not going to pivot anytime soon unless inflation is going to get entrenched. They really do have to make the market suffer and bleed. And so you're really going to see, no matter what the CPI news comes out, I really do think the direction is down. Because at the end of the day, the Fed is going to act. They have to act unless inflation becomes entrenched. They can't go for a shallow recovery. They can't go for a shallow recession. They have to make it entrenched. You're seeing tech companies lay off people day after day. The next one being Meta, probably going to make layoffs sometime this week. So we've seen all the components of FANG lay off engineers. So I really do think this thing is just starting. The Fed's not going to rip up the Band-Aids now. And the CPI data that we're going to get is just going to be more news to them why they shouldn't be pivoting early. And so I really do think there's more pain ahead. There could be a relief rally, maybe to 25K, but at the end of the day, I do really believe the direction is down.
All right, Michael still sees pain ahead. Thank you so much, Michael Nnaji, financial market analyst. Thank you. All right.